everybody, my name is Nate Jones and I have a video for you today. What is captive insurance and should you consider it? It's a very interesting topic because I feel like it's one thing that a lot of people don't talk about and a lot of insurance agents and brokers are scared of it. And today I'm here to kind of explain it in a way that can help you as an agent or as a business owner understand it fully. So here we go. What is a captive insurance company? A captive insurance company is an insurance company that a business starts to insure their own business. It's set up for the purpose to insure some of the insured business's own risk. And it can be domiciled domestically, it can be domiciled internationally, it can be domiciled in the Caymans. There's so many different domiciles that an insurance company can be in, and it is very specific to the needs of that specific business and the structure that's being set up. So premiums and claims are paid similar to a commercial carrier. The insured business is paying premiums to a captive insurance company that is a completely separate entity. It has its own FEIN, bank account, organization, everything is completely separate. So the insured business is paying premiums and claims are paid by the insurance company to the insured business, similar to a normal company. Premiums are also invested in a captive insurance company's within investment guidelines per that captive manager. I'll talk about that later. But so the biggest thing is in captive insurance, there's a lot of different structures. There's group captives where 40 to 100 to 200 companies, maybe even less, come together and they all have ownership in an insurance company based on their premium, and they all come together. Some of the groups can be made up of similar companies. Some of them can be made up of different types of companies. It all depends on the group, and basically all the premium is put together. Reinsurance is purchased to cover claims that exceed certain thresholds, and a lot of companies like groups, and you can fit into a group if you have a specific premium spend or if you're in a specific industry and it kind of fits the culture. Some groups are kind of like fraternities. They want to vet your business out and make sure that you kind of fit the culture and that you're very safety oriented so you can fit in and you're not part of the status quo. So some groups will let kind of anybody in, and those can be scary. So, trying to figure that out is something that I can talk about later. But another type of captive arrangement is a single cell captive, where the business owner owns the insurance company, but the insurance company has to participate in a pool arrangement with other individually owned captives. And usually the pool will share claims up to a certain percentage, and that arrangement allows the captive owner to have the most freedom and flexibility and customization as far as coverages they want in and what they can do with their insurance company. But again, it has to fit that specific insured business and culture and kind of what they're looking to do. Every business is different. Some companies spend a lot in insurance, and some of them spend a lot in a certain coverage. So it really depends on the specific insured business. It's really hard to say one arrangement is better than the other. And then the final arrangement, or one of the three main ones that I'm going to talk about, is a standalone captive. And those are traditionally for very large businesses or specific coverages in the medical field. But very large businesses like Microsoft or Tesla, where they have enough premium and enough risk where they can kind of create their own insurance company to insure some of their own risk. And middle market companies can do that through a single cell, but traditionally standalone captives aren't the best option for a middle market. Not saying that it's impossible, but for the grand majority, it's better to either do a group or a single cell. So what are the benefits of starting a captive insurance company? Number one, I have 5 benefits here. Number one is This is what I think should be the number one thing you look at, is reducing your insurance spend. And this is what I think the majority of insureds look at when they look into captive insurance, is because they're upset with the commercial insurance market. They're upset that their broker keeps walking in with increased rate after rate after rate. Every year, the insurance goes up and it starts to eat into their cash flow and profit margin, and they're tired of it. They don't really see the benefit because their claims are low, but the insurance company keeps charging them more premium. So I think the number one reason captives are Googled or searched on this, or how you found the videos, because you're probably fed up with the amount of premium that you're spending. So you look into captives to reduce that, and that is perfect, because a group captive, you can do that very well. In a single cell captive, you can do that very well. So number two is to customize coverages and have unique coverages that right now you're traditionally not insuring. A lot of companies write a warranty program through a captive insurance company. A lot of companies are insuring large deductibles that they leave in the commercial market, but they put a large deductible and write a deductible reimbursement policy. A lot of companies have coverages that they're not purchasing in the commercial market that is insurable risk that they can write policies for. And it allows you, since you own the insurance company, to look at different coverages that your company is traditionally self-insuring that you can now write with an insurance policy, so you can mitigate kind of your discrepancy in cash flow. So number three is it's an additional profit center. If your insurance company makes money and you don't have that many claims, the insurance company's profitable, and it's another insured business that you as a business owner own. So it's another profit center that you're investing premiums, and you can build up a surplus to be able to use and do unique things with that surplus. Number four, in some cases, there is favorable tax treatment. On 831B election captives, there is a lot of litigation around these captives, but if you use the right captive manager, usually that can be mitigated. And 831B basically means that the premiums up to a certain limit by the IRS is collected in a tax-exempt manner. So the insurance premiums for the insured business is tax deductible, and the insurance premiums are collected in a tax-exempt manner. So being able to reduce insurance spend and also reduce your tax liability and burden by moving those costs to your insurance company the correct way will allow you to save some money on some taxes. Again, ask your CPA. I'm not a CPA, I'm an insurance broker, so I don't know. Ask your CPA. So number five, better risk management. Captives allow you to have better risk management because you're putting your neck out there. You're playing in a game where you're having to pay your losses. So traditionally, if it was Travelers or Chubb, they're paying the premiums, and when you have a claim, you're rushing to call them, or you're not necessarily looking and saying, how can we not make sure this happens again? But if it comes out of your own pocket, there's a little bit more of an ownership there where you're saying, okay, I want my insurance company that I own to be successful, so this is not going to happen again. Let's make sure that we implement safety measures and policies to ensure that this doesn't happen again. So how do you evaluate if you should or if you shouldn't have a captive? Because if you even Google captive insurance, there is a ton of captive managers out there, and it is hard to know if a captive manager is just trying to get a fee out of you or if they're actually trying to help you out, because this is not something that a lot of people know a lot about. And if you're an insurance broker, or if you're an insurance broker and you don't know, it's sometimes hard to be able to point your insured into a direction of an advisor or somebody or a captive manager that actually knows what they're doing and they have a track record. So some of them just want to charge fees. Some of them, they do charge a decent fee, but it's worth it. So having the right partner is key to making sure that your captive insurance company is successful. So what I do at Wexford is we're an independent captive kind of advising. We have a segment of our insurance agency that does captive advising. And basically what we do is we're not affiliated with any captive manager. I am not a captive manager. I'm not in the business of being a captive manager, but what I can do is fully understand what you're kind of looking for, and I can kind of point you in the direction of, hey, you should honestly look into this captive manager and provide you contacts of people that do it really well in the industry, and make sure that you're being taken care of, make sure everything's being taken care of the way it actually should be, because this can be a very sticky process, and a lot of money is being pushed through the table for this. So you want to make sure that it is taken care of the right way. So just like an insurance broker who goes out and assesses the marketplace on your behalf to try to find you the best premium and the best rate for your coverages, you should do the same thing for captives. You should have an independent advisor that's assessing the marketplace and making sure that you're being advocated, and somebody who has experience in this to make sure that you're not being taken advantage of. So that's what we kind of do. We do that. It's one of the things that we do. And hopefully this helps. Comment below if you have any questions or you'd like to set up a call, a time to talk. So hopefully this helps. Thanks.